Hello, I'm Victoria Fritz. Let's take a look at how markets in Europe have ended the trading session today. And the London market has been dragged a little bit lower today by the likes of these two up here, Standard Chartered and also BP, after their results failed to impress investors. Now, the Asia-focused bank that you can see up at the top, Standard Chartered, shares down 6% today. Not only did it report a decline in income, but it also warned about fresh compliance troubles ahead, so not good for that company. Elsewhere, for BP, for example, this is the 9th consecutive quarter of declines in earnings, and it's hard to see the end of the tunnel given the challenging dynamics in the oil market. You can see shares down 5% at the end of the day. Now, the weaker fundamentals for the oil industry are also weighing on the likes of Weir as well. You can see them down at the bottom. It makes pipes and valves, and it's a big supplier to the oil industry. They're also seeing tougher conditions ahead as well. And a quick update on the currency markets. The falling pound is boosting the hopes of exporters and UK manufacturers, but businesses are being hit by one of the steepest rises in purchasing costs, so input costs, in history. And for those of you who dabble in classic cars and fine wine, the weaker pound is hitting the UK's collectibles sector as well. Demand in Britain has fallen in almost all categories. Let's get into some of the detail with Richard Dunbar, who's the investment director at Aberdeen Asset Management. Richard, we're going to start with the oil price and what's going on there. You know, it has improved, let's be honest, between where it was sort of back in January to where it is now. Still low, and it's definitely creating some winners and losers in this space. Who's ahead and who's behind in the oil game?
Well, looking at today's results, Shell is a pretty solid set of results, but they benefit from the acquisition of BG, which they made just over a year ago. An expensive acquisition, $50 billion, but it's allowed them to increase production at a much greater rate than some of their peers. On the other side of the equation, BP, these are actually pretty solid results, but the E&P, the exploration and production business that they have is difficult. It was loss-making this year, and the refining business has been difficult globally for all players in that business. So that's struggled, and hence the shares down a little today. But both companies managing their costs and cutting their cloth to suit what you correctly describe as still a pretty difficult environment for all the oil majors. Yeah,
and it's not just the oil majors struggling with the oil market, is it? I mean, it's the likes of Weir Group as well. There are so many companies that are affected by this low oil environment.
Well, the Weir results today are interesting, and to put Weir in context, the share price in Weir has doubled this year to date. So investors are hoping and indeed expecting that at some point they'll announce better news about their customers, which is the big oil companies and the big mining companies. And there were elements within the results today that showed a bit of light at the end of the tunnel. They tried to signal an end to the downturn in the US, and they signaled that elsewhere in the world things weren't getting any worse. But the shares are down today, so it's still difficult times for Weir, but investors expecting that better times will come.
Well, they certainly are. Now, let's talk about sterling, or the value of the pound. It certainly didn't get much of a boost when it comes to hearing that Mark Carney isn't packing his bags just yet. It seems to be sort of pegging lower and lower and lower. It's down sort of almost 20% against the dollar and the euro since the EU referendum. But it's creating some winners and some losers. Tell us more.
Well, we're seeing exactly what one would expect to see. It's a mathematical fact that the import costs are going up. If you're exporting, you're in a very strong position, and we're seeing that. We're seeing the benefits of the export sector doing well. We're seeing those who are selling in sterling doing well. We saw the sugar rush of buyers coming from outside the UK to pick up bargains when the currency first fell. But we're seeing the problems now of those companies trying to replenish the store cupboard. We're seeing it in classic cars, we're seeing it in wine, we're seeing it in the food manufacturers and the food retailers, that the cost of replenishing the shelves is going up. So inflation is going up, but there's great hope that our exporters can still benefit from this.
And there are lots of businesses around the UK that export to the EU, try and do some of their business in the EU. There seem to be some changes afoot when it comes to tax for those businesses.
Well, the EU, like many around the world, are looking at, I suppose, what they would define as a fair rate of tax. We saw it in the UK with the debate over what Starbucks or Amazon should be paying, and the EU are looking at that and trying to ensure that global multinationals pay what they see as their fair share. But then on the other side of the equation, there are countries like Ireland and indeed ourselves who are keen to cut the rate of corporation tax and to try and attract and grow our economies through the success of multinationals. So there's a sort of dichotomy between a desire for companies or for governments to get companies to pay more, but at the same time trying to attract those same companies to do business in our own countries.
It's a real political tightrope. Thanks very much, Richard. Enjoy the rest of your day. Now, US stocks and bonds have kicked off November with some pretty heavy declines on Tuesday. Bonds selling off. Data showing that China's factory activity is actually rising to its highest level in 2 years. The concerns about the Chinese economy have spooked many of the markets at the start of the year, but investors said that recent data has been a lot more encouraging for global growth. So that's how the US markets are faring at the moment. Plenty more throughout the rest of the day and also available on the website as well, bbc.co.uk/business. That's it from me.
Thank you very much.